OnlyFans, a platform for adult entertainment, appears to be performing better than the rest of the technology industry. According to Ami Gan, the company's CEO, the number of creators on the platform, as well as subscribers, has increased over the past few months. We're not seeing any slowdown. OnlyFans is a company that would fall under the category of sin stocks that surprisingly are quite resistant to recessions. Stay tuned to see what sin stocks you can get invested in today. OnlyFans was created in 2016, but its popularity skyrocketed during the pandemic, when superstars and bored normal people alike caught in quarantine began making their own profiles and pushing material. OnlyFans has since become one of the most popular social media platforms. However, the rise of sexfluencers, or content providers who specialize in sexuality and relationships, provides an entertaining insight into the workings of the market. Adult entertainment and our thing were the only two industries that Tony Soprano, a fictional mobster, was ever quoted as saying were the two industries that were recession-proof. It ended up he was correct. According to the findings of researchers at the LSE Center for Economic Performance, economic downturns encourage an increase in the number of people engaging in criminal behavior. They also increase demand for all sorts of adult entertainment, including but not limited to pornography, alcoholic beverages, gambling, and cigarette products. Because the phenomenon is so well documented, investors and scholars have even coined a label for it: sin stocks. In 2022, equities associated with vices such as Anheuser-Busch and British American Tobacco did significantly better than the S&P 500 index. OnlyFans, on the other hand, appears to have been spared a significant portion of the suffering experienced by the technology industry. In 2022, the business only announced one small round of layoffs, in contrast to other industry titans such as Twitter and Netflix, which each eliminated close to half of their staff. OnlyFans generates revenue, and since the year 2020, the platform has provided its owner, Leonid Radvinsky, with a minimum of $500 million in net earnings. According to Gan, there are now 3 million more people creating content than there were a year ago. These so-called sexfluencers mix typical online influencer models with sexual content in order to create incomes of up to $900,000 per month. Due to the fact that OnlyFans is still a private company, individual investors are unable to participate in the exciting growth narrative that the firm is experiencing. And Gan believes the team is, quote, comfortable being privately held, so it is highly unlikely that this will ever change. On the other hand, there are a variety of alternative methods that investors can speculate on the adult entertainment market in 2023. Stay tuned to learn what sin stocks you can invest in right now. But before we continue, be sure to give this video a like and subscribe to KABOOM if you haven't already. Over 40 strip clubs may be found under RCI Hospitality's management across the United States, which trades under the ticker symbol RICK. The chief executive officer of the company, Eric Langan, stated that the organization was, quote, recession resistant, and that, quote, business is very, very good, and we're continuing to run record sales quarter after quarter. Alcohol sales, which typically have higher markups at strip clubs, account for 45% of the company's revenue. To put it another way, the corporation maintains pricing power despite the fact that the economy is in the midst of a recession and inflation rates are at historic highs. The company reported an increase in revenue of 29.9% for the fourth quarter of 2022 and a growth in net free cash flow of 71.6% for the same period. Since July, the price of the stock has increased by 95.8%. The real estate investment trust known as Gaming and Leisure Properties Inc., which trades under the ticker symbol GLPI, is responsible for the ownership of 57 casinos located in 17 different states. These casino locations are occupied by well-known brands such as those owned by Penn Entertainment, Caesars Entertainment, Boyd Gaming Corporation, Casino Queen, Bally's, and the Cordish Companies. The corporation is in a good position as a result of all leases being triple net. Over the course of the past year, Gaming and Leisure have seen a gain of 8.5%. It's currently trading at 21 times its earnings per share and provides a dividend yield of 5.6%. There is a fund that makes it simpler to wager on this phenomenon if you'd rather not pick individual stocks related to sinful behavior. The Advisor Shares Vice ETF, which trades under the ticker symbol VICE, has more than $8.5 million in assets under management and invests in sin equities like Heineken, Monarch Casinos, and MGP Ingredients. Over the course of the last half year, the share price has increased by 6.5%. What are your thoughts? Do sin stocks have room in your portfolio? Let us know in the comments, and make sure to hit the like button and subscribe to KABOOM KABOOM for more videos.